Hello and welcome to the Diwali special edition of MF Corner. I'm Sonal Bhutra and with me is Vinnii Motiwala, wishing all our viewers a very happy and prosperous Diwali. This is a time for a lot of excitement, right? We have Dhanteras on Saturday, then we follow it with a lot of festivities. So wishing all our viewers a very prosperous one. But what a Samvat it has been when it comes to markets, when it comes to the returns that we've seen in the mutual fund industry. Before we toss to our guests for the show today, let's talk about the big moves that we've seen this time, Vinnii.
Absolutely, Sonal. Firstly, festive greetings to you as well, Hope we all have a prosperous new year. But it's been an interesting year, like you were saying. And what was shining the most was gold and silver. That took the center stage. And obviously, this was in Samvat 2081. While obviously hybrid asset allocation funds, when you look at that, that was also a steady, modest gain, what they managed to see. Equity-heavy domestic mutual funds, that struggled a bit to keep up with the pace. And as we enter Samvat 2082, what is the big question now? What is the next mutual fund industry story that we're watching out for? What is the next sector that we should keep an eye out on? What are we watching out for? We have Ashish Gupta, CIO at Access AMC, as well as Ajay Khandelwal, the fund manager at Motilal Oswal AMC, joining us to talk to us about the expectations from the industry going forward and what we are keeping an eye out on. Ashish as well as Ajay, good afternoon. Thank you so much for joining us on the show, and festive greetings to both of you as well. Let me start with the main question now this time. It's when you look at it on the year gone by, or we're spoiled maybe in the last couple of years when you look at it as well, in terms of the performance that the industry has given us. Now, which segments are there that surprised on the upside or maybe failed to surprise you all also in Samvat 2081? And what are the signals that you actually saw in terms of pivoting your allocations in this Samvat that has gone by? Ashish, first you.
Thanks, Vinnii and Sonal, for having us, and greetings to you for Diwali and all your viewers. I think last 12 months has been an interesting time. I think when we entered Samvat 2081, the market mood was very different than what it is today. But actually, there were multiple signals, and that provided interesting opportunities. So if you go back about a year from now, the focus was entirely on the small and mid-cap space. Actually, the entire industry was focused just on funds in those categories. We actually saw the strong pipeline of IPOs and supply that was coming in that space, and we reduced our exposure in that segment. Similarly, if you recall, after the changes at the RBI, RBI stands towards monetary policy change from January of this year, and that was really a big signal towards increased allocation to the financial sector, both the banking sector and NBFCs, and we believe that is something that has played out for the last 9 months and will continue to play out for the investors over the next year as well. The third big one was really more recent when we saw more decisive government action to spur consumption. We have had the largest ever cuts in GST. And I think consumption is a theme that is coming more center stage on back of that. So those are 2-3 kind of big macro triggers for shifts in allocation that we saw over the last year.
Some interesting themes that worked out, right? Very interesting insights as well. But Ajay, what's your take? What are some of the themes that you think could work in the next Samvat, and you can pivot your allocations accordingly?
Hi. So happy Diwali to all the viewers in advance. Coming to themes, I think given the uncertainty in market, and because if you look at last, as Ashish also explained, whatever has happened in last 1 year, I think some of the sectors which are very well placed, according to us, are financials, where we believe NBFCs, capital markets, they will do very well. And another interesting sector, I would not say sector, but another theme that we are looking at is that there are a lot of these companies which are putting up capacity to substitute imports. Now, this is something where we believe that because last year has been volatile, there's been impact on operating performance, but this year I think all those things will iron out as soon as the capacities will come on stream. The import substitution, I think, will lead to P&L improvement drastically. Uh, and also, I think with the cuts, urban consumption, because it has suffered for now almost 2 years, I think urban consumption will make a comeback along with the premiumization. So I think these two, three things will continue to do well in this year.
Absolutely. So consumption is one theme that I think everyone's talking about coming back, and this GST cut is something that is going to give it a boost as well. Ashish, while when you talk about the reality check that we got in terms of the mutual fund industry, because when you look at it in terms of returns also, look at the multi-cap, flexi-cap schemes, they were actually the ones that were posting some bit of a modest gain that we saw coming in here, not even great returns. So what is it as an investor that should maybe be my key learnings that I should be keeping an eye out on? If the market continues to be volatile, what should the expectation now be for Samvat 2082?
So I think, first of all investors, and particularly equity investors, have to be clear that markets are inherently cyclical, and volatility is part of the equation. Even if there is a structural uptrend, you will never have a linear move in the market. Right. And having spent 30 years in the market from, we have seen Asian crisis, dot-com bubble, GFC, COVID, I think volatility is natural. And while last year has not been great for market, I think it was a good consolidation phase for the market. We have seen market expectations become more consistent with the earnings growth trajectory that has come in, because over the last year, the pullback in market is largely in line with the earnings downgrade we saw. So we have seen about a 10% downgrade in earnings expectation. And as you were highlighting, the pullback in the markets has been depending on the part of the market you are in, between 5 to 8%. So I think there has been a recalibration of expectations. If I look at the year ahead, I think we are looking at a period of better earnings growth, and we see less risk to earnings coming through. So I think the earnings have bottomed out now. And actually, FY27, we think earnings growth will move up from the single digit that we'll see in FY26 to somewhere between 15 to 17%. So we do expect a period of better performance from the market, despite all the global headwinds that are still around us.
Take that point. Ajay, we've seen this big rise in the SIP base, right? Every month we are talking about record high numbers. But as we did see Ashish also mentioning that earnings growth that has bottomed out now, we'll continue to see higher numbers from here on. What would you say to new and existing investors? What kind of return expectation should they have on the markets now? Because that is exactly what everyone wants to know when they look at specific mutual funds to invest in as well.
Yes. So continue to what Ashish said. See, we have in last 25 years not seen two consecutive negative year return in market. So I think that way we are placed well in terms of market where it is there. Secondly, for us it is fairly simple. Last 1 year there is no return, whereas in 6 months' time we'll start looking at FY28 numbers. So practically 3 years of earning roll, and there is no return. So from that perspective, I think markets, according to me, should be broad-based, and SIP investors should take this opportunity to actually add for the time being to their allocations. They should increase their SIP amount because I think market will be broad-based and this will be a good year.
Okay, markets will be broad-based and this will be a good year. That's the word coming in from Ajay. But on that note, actually we're going to sip into a very short break. Don't go anywhere. We'll come back and discuss more in terms of trends now that we're expecting to see in Samvat 2082.
Welcome back. You are still tuned into the Diwali special edition of MF Corner. We still have with us Ashish Gupta, Chief Investment Officer at Axis AMC, and Ajay Khandelwal, who is the Fund Manager at Motilal Oswal AMC. Well, we've been talking about the equity part of things and how markets reacted or performed there. But commodities, that has been one space that has surged and how. I was looking at the returns, gold up anywhere between 55 to 60%, those ETFs doing well. Silver ETFs, they are trading at a premium. What's happening here? Ashish, let me come to you. Do you think this is something that could continue and investors should continue to look at this particular segment? How are you looking at the gold and silver ETFs performing from here on?
Sure. So, Sonal, first let me clarify that within commodities as well, we have not seen a broad-based rally.
Yeah.
We have seen precious metals like gold, silver do well. More recently, copper has also started doing well. But if you look at, for example, energy commodities, they are actually not performed well at all because global demand outlook continues to be weak. Precious metals has been another story, and the reason for that is that currencies have two roles to play, or two large roles to play. One is as a means of exchange, and secondly, a store of reserve of value. And as over the past 12 months or 24 months, you have seen the confidence in US policy making become weaker. People have looked for other stores of value. And really, that's where kind of gold and silver have come to prominence. As US has the largest monetary base. USM0 is itself is just $6 trillion. USM3 is more than $20 trillion. So as people have started to kind of look for the more diversified stores of value rather than USD, there has been incremental investments that have gone into gold and silver, both from investors as well as central banks. So I think this trend is likely to continue, given the fact that there are more rate cuts expected in the US, despite US inflation still looking up. And investors need to have an allocation to these in their portfolio. Having said that, I think like we were seeing in the small and mid caps last year, one should not really expect the returns of the last 12 months or 24 months to be repeated. So, for example, gold is now up 40% each in 2024 and 2025. So, I don't think people should invest with that kind of return expectations from these metals in the short run. But I think as a store of value, these are important asset classes. And really, while making a portfolio, you need to have uncorrelated assets to enhance your risk-reward profile.
Absolutely. You don't expect those high returns coming back again. That's the word there. But yes, because look at the commodity funds, right? This on an average, which I was looking at it. Gold commodities on an average, the return that came in the last 1 year, 63%, 92% came in from the silver-related commodity funds, ETFs, fund of funds. All these have given fabulous returns, but don't expect similar returns coming in. Ajay, the point in terms of commodity side investment, as well as what do you think are going to be 3 themes or sectors that one should now monitor in this new Samvat, which will give them good alpha generation?
So as I explained earlier, I think financials, because what we have seen is that in terms of lending, I think the growth rate will improve. With interest rate going down, liability repricing will happen and margins will also see improvement. The asset quality pains are almost over. So I think financials will do well, and within there also, I would say NBFCs will grow faster. They'll continue to win market share. And in terms of price action, I think capital markets, some of the intermediaries in capital market, they have seen much higher price correction than what is actually in terms of business performance, what was there. So they will do well. Uh, Apart from that, I think healthcare will continue to do well. Urban consumption, these are few things which we believe that they will continue to do well in this year also.
Take that point. So this is all about what could do well, what the market outlook is, and the entire macro perspective on mutual fund investments as well. But gentlemen, we do have a rapid fire for you. In fact, Vinnii has drafted all those questions for both of you. So let's get started with that one. In this question, we'll ask the question and we'll request both of you to answer that. Let's start with the first one. Ashish, this is for you. Your Diwali bonus. Would you invest it in an SIP, multi-cap fund, or commodity mutual fund?
So I think it will be a multi-cap fund at this stage of the market. I think after the pullback over the past 12 months, it's a good time to be investing in equities.
Okay, multi-cap fund, that's the pick coming in from Ashish. Ajay, your word, multi-cap fund, commodity side of fund, any other sectoral fund?
Multi-cap and even sectorals, because as I said, I believe markets will do very well this year. There will be broad-based rally. So some of the sectors which are adversely impacted because all the uncertainties that has played out in last 1 year, I think we will see a strong comeback there also.
Okay. So that is also sectoral, also some of the themes that you have mentioned also is something that we could look at. The next one, Ashish, if you could give one thumb rule for SIP investors heading into Samvat 2082, what would it be?
So I think just that you need to stay disciplined, use volatility as an ally rather than something to be. So use volatility as an opportunity and use the pullbacks in the market to stay consistent with your SIPs.
What about you, Ajay?
As I said, these are good opportunities where market has given practically no return, and in last 25 years it has not happened for consecutive years. So please use this opportunity, add to your SIP amount and take advantage of it.
Okay, we talk about a lot of things which are trending in the market. It's all about trends on social media or otherwise in the market, right? What, according to you, Ashish, is the biggest myth about multi-cap funds or flexi-cap funds you would like to bust for the retail viewers?
So I think one simple thing is that multi-cap and flexi-cap are not the same funds. So multi-caps have to invest 25% of the AUM across all three categories, large, mid, and small. And flexi-cap can invest in any proportion. So they are not really the same category of funds. Both are distinct from each other.
Ajay, one sector that you think maybe is overhyped and something that one could avoid?
So see, there are, you will find companies in all the sectors where sometimes the price performance run ahead of numbers. There are certain sectors where Street has started valuing on order book. So we need to be careful with the narrative and numbers wherever, and especially during these uncertain times where somebody is losing market share or working capital is getting stretched. That is where I think we need to be very careful. So there are enough examples in all the sectors, but by and large, I think these fundamentals is something which I would like to highlight here.
What about you, Ashish? Any specific sector that you think is overhyped, or you would go with Ajay's answer?
So I would, in fact, not a sector, but I would say, Ajay spoke about the capital market theme. We also believe in that theme, but we would really not recommend having exposure to companies that have high exposure of products like derivatives, because I think regulation there are evolving, and that might put earnings at risk.
Ashish, a quick one. What are the three themes maybe that you're looking at in 2082? Samvat?
I think Ajay spoke about financial, so I would not kind of repeat that. The three I would add, one would certainly be defense. I think both in India and globally, spend on defense is increasing, and in India there is also a push towards indigenization. So I think we should see companies in that sector do well. Consumption, not just because of the GST rate cuts, but we are seeing both patterns of consumption changing with the Gen Zs, as well as new channels for consumption take root. And I think companies that are at the cross section of this are really going to benefit. Third, I would say specialty manufacturing and automation. I think that's where we are seeing globally companies gain market share. So I think those three would be my picks in addition to the financials that Ajay spoke.
Take that point. Ajay and Ashish, thank you so much for joining in today. It was a pleasure speaking with the two of you, and festive greetings to you and everyone at your companies as well. That's all we have on this Diwali special of MF Corner. Thank you so much for tuning in. But we'll take your leave. Thank you for watching, and stay tuned for more news and updates.